everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfield, and here are three important things to pay attention to for the upcoming trading week. Now, of course, the big talk track around any market around the world is going to be the collapse of the banking system. Now, what do we mean by collapse of the banking system? Well, a couple of weeks ago, we saw Silicon Valley Bank start to have some issues. You saw Silvergate have some issues. And we went into that weekend with a bit of uncertainty and not really knowing what was going to happen to our financial system. And of course, we get near the end and all of a sudden Sunday night, people are going, we could have a major run on the banks on Monday, systemic failure. And of course, the regulatory agencies stepped in and bailed out those banks again. It's not a bailout. It was, I don't know what you call it. You give $100 billion worth of line of credit to these companies to help bail them out. I call it a bailout. Anyway, that saga continued because first we saw Silicon Valley Bank get some protection, and then all of a sudden they seized Signature Bank, which wasn't really in any financial crisis, but the FDIC citing a lack of confidence in their management, and then basically going after them for being a crypto bank. So all sorts of crazy things going on in the banking sector. Then later on in the week, we saw Credit Suisse go, hello, we have a problem here. Oh, you know what, Swiss National Bank, you'll bail them out for $54 billion. First Republic Bank going, we need some help too, guys over here. And of course, JP Morgan, Bank of America, and 11 other banks stepped up and said, hey, you know what? We'll send you a lifeline of $30 billion. So by the tail end of last week, you're going, all right, feels pretty good. We're bailing out the banking sector. And then Friday comes around and First Republic says, hey, thanks for the $30 billion, but we have way bigger problems than that. And our market started to panic again on Friday. That brings us into this weekend. And what can we expect for this week going forward? Well, the reality is there is way too much uncertainty in that banking sector and a lot of shoes yet to drop. We don't know the extent of the damage that some of these banks put themselves in. We wouldn't have thought that Silicon Valley Bank would have done something so stupid like bought long-term dated treasuries when you know interest rates are rising. I mean, that's just Finance 101. And if it's not Finance 101 for you, I would highly encourage you to take Bill Addis's focus session on bonds. You'll learn all about the mistakes that Silicon Valley Bank made. Now, this week, it will be one of those things to watch. I actually brought up the XLF, which is an ETF that tracks the financial sector, and I looked at all 67 holdings. Many of those became trading or investment opportunities for me, and there might be some good opportunities in there for you as well, but you got to know what to look for, sift through and find those maybe diamonds in the rough, companies that may have been beaten down a little bit too much or caught up in the fear. There's also going to be some of those banks which may not make it through this. So again, extreme risk in that financial sector, so be careful. It will be the driver for this market for a few days next week. But you know what? There's something that's even bigger going to be happening, and that is going to be our central bank, the Federal Reserve. Dun, 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 dun. One of the major and most anticipated announcements of the year is going to be this announcement this week, and it is about the rate statement. It is going to happen Wednesday at 2 p.m. Eastern Time. The expectation right now, which is about 75%, is we're going to go from 4.75 up to 5%, an increase of 25 basis points. Now, this expectation has been swinging wildly. About a month ago, it was 50 basis point increase, and then all of a sudden it dropped to 25 basis point increase. And then because of this financial fiasco, some people are actually saying that they're going to cut rates. Pretty sure that won't happen. If you look at the Fed funds futures that are provided out at the CME, you can see that right now the probability is pretty high that we're going to see it raise 25 basis points, and that's where I'm hanging my hat on. Bottom line is it doesn't really matter. There's going to be a tremendous amount of volatility when that happens, and even more volatility shortly after that. Why? Well, because Jerome Powell gets grilled again by the press. That will be Wednesday, right after that rate announcement at 2:30 p.m. Eastern Time. And that can create tremendous volatility. So what we would recommend is be very cautious, most likely get out of that market. Just be careful because we don't know which way he's going to go. We expect 25 basis point increase, but any deviation from that or comment that might create some uncertainty can cause wild swings in the market. And as a risk manager, we should protect ourselves by most likely stepping back and not being involved in the market at that moment in time. Now, normally these things will have some volatility and then settle, and that may present a better opportunity to be a trader or investor. But it's not just done for the US. We have other banks around the world. That's right. We can step across the pond and go look at the Bank of England, which will also be having a rate statement. That's going to be happening a little later on in the week, and Thursday at 8 a.m. Eastern Time. They are also expected to raise from 4% to 4.25. So if you're trading that British pound, there might be some opportunity there as well. Now, our final piece for our Monday morning must-knows is going to be services and manufacturing. Obviously, at this point, we're trying to get a pulse of how different economies around the world are doing. based in the US. Obviously, my main focus is what the US is doing, but those other markets may have an impact on us. All of this happens on Friday, starting in the wee hours of the morning at 4:15 a.m. Eastern Time with France's services and manufacturing numbers. Shortly after that, we get Germany at 4:30. Right after that, the EU comes out with their numbers at 5 a.m. And then we go over to England, which has at 5:30 their numbers. And finally, at 9:45 a.m. Eastern Time, we have the United States coming out with our services and manufacturing numbers. Now, all of these can have an impact on their respective currency. The interesting thing about the US markets is it will happen 15 minutes into the trading day, which can create a lot of volatility as well. So it's going to be a very busy week with this dark cloud of financial firms looming over us, which could create more negativity. How much more bailouts is our government and regulators going to do on that sector? You also have interest rates for the US, interest rates for England, and then you have services and manufacturing numbers coming out for most countries around the world. It's going to be a very busy week. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.